Today, my guest is Dave Morgia. Dave is raising money for multifamily syndication. He's based in the Big Apple, New York City, and he's also the host of the podcast, Making Money in Multifamily. And in just a minute, we're going to talk with Dave about raising money for syndication. But first, a quick reminder, if you like the show, CREPN Radio, please let us know. You can like, you can share, you can subscribe. And as always, we love to hear from our listeners. You can leave a comment. Also want to remind you, if you'd like to see how handsome our guests are, be sure to check out our YouTube channel, and that's Commercial Real Estate Pro Network. With that, I want to welcome my guest. Dave, welcome to CREPN Radio.
Darren, thank you for having me. I really appreciate having me on, and excited for the talk today.
I'm looking forward to it. We had a chance to talk a little bit ago on your podcast, and it was a good time, and I'm delighted to have you. Glad you agreed to come on today. Before we get started, if you could take just a minute and share with the listeners a little bit about your background.
Yeah, absolutely. So I guess my story starts, it's probably a little bit shorter than yours, Darren. You have a lot more years under your belt than I do. But my story starts, I guess, in real estate about a year ago. Back at my previous job, I have experience in power plant operations, nuclear, back where I'm from, up home in Oswego, New York, upstate New York. And then I recently moved down a year ago down here in New York City, do natural gas combined cycle now. So once I moved down here, I was kind of getting the itch to get in real estate. That was a little bit before I moved down here, and I had decided that I wanted to get into the space, and it coincided really well that I found three like-minded individuals just like myself, similar age, similar ambitions, similar mindsets, Travis, Tony, and Forrest. And the three of us have founded a syndication company, and it's been a pretty exciting journey so far. We've grown a lot, met a lot of fun people, and like you mentioned, I run a podcast, and it's just like you're doing, Darren, a great way to meet a bunch of high quality people, great mindsets, great knowledge to share. So it's just been a just great learning journey so far. And to get into the real estate experience that we've kind of grown in with our company, we started out with this thesis, right, where we see a lot of these syndicators kind of just jump into things and maybe not necessarily put the cart before the horse, but maybe they should be figuring out what their abilities are before they get too invested in these types of deals on the sponsor side, at least, right? So our idea was, well, why don't we see our capital raising abilities? Because at the time we thought that our capital raising might be one of the weaker points that we had just because of our lack of experience and network in this industry. So we said, why don't we try to test our wits with this capital raising? And we did that by basically taking three deals of a sponsor, and I'm not going to name names just to kind of keep it kosher today, but a sponsor that we trust and, like the deals that they put out, we think, as a sponsor of their quality, and the deals they're putting out are obviously quality, and these deals we're not going to go in without backing ourselves. So we took these three deals and we raised for these three separate deals. And you might ask, why didn't you just try to raise for one deal and get a share of the equity? And we just kind of wanted to repeat success instead of just maybe claiming it as a one-off. So instead of saying, I think the total ended up being, Darren, around 200,000, something like that. It was, into the six figures. So instead of saying, why put 200 into one deal and get a piece of the pie, we wanted to kind of repeat and see if this thesis was true, that we could, continue to raise and attract investors to come along with us on this journey. And it's worked out so far. And then obviously we have a lot going on outside of those three deals. We kind of stopped that thesis. We were comfortable with that raising, but I guess I'll leave it to you to maybe pick at that for a second.
Yeah, no, I appreciate you kind of sharing with sharing with us a little bit about your background there. I guess the first thing I'd want to back up to, you mentioned that the four of you are like-minded. What was it that attracted you to real estate?
What attracted me was probably a similar journey to a lot of people you hear. Rich Dad Poor Dad is the Bible. Yeah, I did read that. And then, I was always diligent growing up, putting money away into retirement accounts, all that good stuff, trying to max that out as much as I can, did pretty good at that. And I just saw myself needing to get to that next level where, okay, I can just continue to max my retirement accounts or do all this good stuff, IRAs, yada, yada. But where am I really going to take it to the next level and try to create wealth that I can use today, not, 30 years from now and have to rely on having a job for 30 years. So I just, research. It's kind of one of my things. Is just I get it really heavily into something, and real estate was what stuck for me. It just made the most sense to me. And it just happened to coincide when I moved down here. I happened to meet my three partners, like I mentioned, and we just kind of hit it off. The relationship grew naturally, and we all wanted to get into syndication because we thought the scale was really attractive for us at our age and our ambitions. We wanted to really dive into this business and kind of jump a little ahead instead of maybe dealing with a single or duplexes, something like that. So
got it. So instead of doing the onesies, you recognize the power of the multiples. Is that kind of the...
Exactly, yeah. And then I think a lot of it that attracts us too is not even the scale, but just the I guess what comes with scale is the consistency of the underwriting and everything like that. I mean, when you have a single or a duplex or triplex, you have one vacancy and your numbers get torn apart for the month or the few months that you're recovering. So to be able to put a couple zeros behind those numbers and say we can estimate a little bit more exact on our future NOIs and expenses and all that good stuff, it was just really attractive for us.
Got it. So you mentioned that you and your partners made the decision to focus on capital raising. Was there a process prior to that? Had you guys been underwriting deals? Had you been looking at possibly doing a deal? Was there how did you arrive at the decision to raise capital?
Yeah, so I think just to clarify, we're always looking for our own deals, right? We invest in Florida, namely Tampa, Jacksonville, and Orlando. And these deals were not in those markets, but it was in Dallas, which is still a market we enjoy, but just not where we're going to invest as a sponsor. And I guess the theory was the bandwidth wouldn't be too much more for us to handle raising for a deal outside of our own while we work on our own business, right? So we said, we can attract investors and raise money for these three deals, and meanwhile still grow our actual syndication business where we're going to try to find our own deal and find our own partners, whether it be PMs, brokers and all that stuff, where we grow on our own. And then with that capital raising, that just further proves that we're going to have that last piece of the puzzle to be able to fund the deal on the equity side. So, it's just one of those puzzle pieces that we wanted to shore up a little bit more to make sure that we were ready to do that. Because, Darren, what would happen if we found the deal of a lifetime and we didn't think we could raise? That would just be awful. So, that's kind of where we stand with that.
Got it. So you made the decision to raise capital. What was your process? What was your thinking? Take us through from the decision to raise and deploy the capital.
I guess, could you just ask the question again?
Well, so you made the decision to raise capital. Were you, did you go straight to friends and family? Were you, did you, do a lot of meet and greets? How were you, who were you raising the money from?
Okay, yeah. So I guess it would be a mix of both, right? So we do have a couple of friends and family in those deals, but then we also have people that we've grown with our network. Along with the podcast, we have a meetup with the same name in New York City every Tuesday. We do weekly. It's pretty small, but it's intimate. So the people that come, there's a close group of us that come often, and it's kind of a little more friendly. And not that other meetups are not friendly, but we just have a little more laissez-faire. We get a little more intimate with what we got going on and kind of less pitchy and just more of just like a fireside chat mastermindy type meetup. So we enjoy that. We like to give that to investors who might be less experienced than us, right? So we can just tell them what we have going on. And I think that just naturally attracts some people because they can see that openness that we have, week to week, that consistency that we're still here, we're still doing our thing. And so there's a couple of people like that in the deal as well. So I guess, it's a little mix of business and friends and family. So.
Gotcha. So building your list of prospective investors, is it primarily been through the meetup and the podcast? Has that kind of been your way to grow your list?
Yeah. So I think the list, it definitely grows a lot through, interactions, whether it's through the podcast or networking through there, or we started to really kind of ramp up our in-person networking. Just went to a conference recently, trying to go to more, trying to really fill up our schedule because there's 4 of us and we're trying to leverage that fact by maybe saying not all of us have to be at the same place at the same time, but, kind of spread those branches out and see everybody, meet everybody. So yeah, I mean, it's just a concerted effort to make sure that we are meeting the right people. And it's pretty fun to do that. I mean, I'm sure you can attest to it, to kind of reach out to people and learn about them. It's a lot of fun. It's really more almost, I'd rather just meet them genuinely and intimately, and then any benefits that come with that are just an added bonus. I mean, we haven't done anything together professionally yet as far as the deal goes or anything, Darren, but I mean, I've enjoyed our couple-week relationship already. I mean, you went on my show, now I'm on yours, and then we're going to be, bouncing back and forth when our shows come out. So it's just fun to kind of create and learn and grow with people as we go. So yeah, I guess going off the tangent there, it's a little bit of both, a little bit of the podcast, a little bit of the branding, and then a lot of it's, the handshakes and meeting people in real life.
So have most of the people already been in the orb of real estate investing, or have you attracted people outside of the real estate orb that perhaps hadn't thought of real estate?
Yeah, so I would say, going back to that meetup, a lot of the people that we attract to this group, a lot of them are kind of newer to real estate, or at the very least syndication and that model. So it is fun to kind of show them the ropes a little bit and bring them up to speed as to what this model really is and a lot of the verbiage. I mean, a lot of it is just a different language, right? So you're talking about shortening words and all this other stuff, these acronyms that people might not understand and scare them away, but it's really just kind of learning the rules of the road, and it's not overly complicated. So to be able to bring those newer people in to see that is fun. And then in person, a lot of them are kind of in the space already, because if you happen to go to a conference, say, Darren, realistically, most of the people there are trying to grow their business already, or at least that's what I've experienced. Is a lot of them, maybe 7 or 8 out of 10, kind of have something going on already, even if it's like a smaller business, just some smaller multifamily or single families, they'll have something going on typically. And you find people that are completely fresh, and that's awesome for them. I mean, it's a great way to accelerate, is to get to a conference when you're new. But yeah, it's almost more where if you're in a more kind of intimate setting and smaller setting, then you might see the newer people. But in the bigger scale, that's when like the fear is over, when you're kind of growing, and that's when kind of the big hitters show up and start to mingle and talk trade, basically.
Got it. So from the I guess more like the meetup, the new people that you've met or kind of mentored or worked with, and kind of brought in, and like you talked about, explaining some of the lingo and what it all means. Have you found that there's an appeal to them? I mean, is it about future? Is it about tax advantages, security, cash flow, appreciation, leverage? Is there anything that, or is it just kind of all of the elements that are the power of investing in real estate?
Yeah, so I mean, is what these people are trying to get out of the meetup that we host? Is that what you mean? What they're attracted to it for?
Yeah, when you're talking to somebody new that that's coming to your meetup, and they're looking at it, maybe they've heard of real estate, but they don't know all of the potential.
Sure. Yeah. So, I mean, for a lot of people, right, they see real estate, it's got a lot of benefits to it, obviously, and that we could have a whole other episode about that. But I mean, there's tax advantages, there's the leverage you can get. And then just, leveraging business partners is a great way also, just to kind of really ramp your success up. And I could just go on and on, but I think the common theme between all of these things for the people that are attracted to, say, my meetup or anybody else's meetup, or just learning in general, is the fact that most people just kind of have this itch, this drive to take more control of what they have in their life. Kind of like I spoke about previously, right? I was talking about my retirement and then wanting to kind of switch that to today and improving today. So I think a lot of people just want to use real estate as that vehicle. And I mean, it just makes sense, right? There's a lot of advantages, like I just spoke of, where you can take advantage today of these rules in real estate and kind of take more control of your life, whether it's you want to get out of your 9 to 5, whether it's you enjoy your 9 to 5, but you want to, just have options and be more secure in your life, where maybe you're not earning as much as you like, but you'd like to earn some more on the side. I mean, there's multiple dozen reasons why people kind of get into it. And I think in our meetup, specifically ours, they see the value and the intentional behavior that we have at the meetup. They see that we care to share our story. They see that we want to grow along with whoever comes through the door. I mean, we have people that do single families. We have people that do stuff completely unrelated to syndication, and that's fine. We talk it out. I've offered multiple, types of advice to anybody with any type of deal, because I mean we're pretty decently versed in other stuff too. So if you have something that's problematic for you and you come through the door on Tuesday, we'll hear that story, and maybe we know somebody, or maybe we have an idea for you. I mean, I've mentioned seller finance to a couple before, and they're like, oh, I didn't even know that was a thing. So it's just really simple stuff that, like, why not open that door and let people kind of come in and solve problems together. So I think just in general, that problem solving and taking control of your life mentality is what gets people in the door.
Yeah, no, I think there's always power in sharing your ideas and to seeing what matriculates or comes out of that when you expose it to somebody else. That's great. So a couple of questions on the decision to raise money. One is, how did you pick the sponsors? What were some of the things that you looked for, or how did you get to know or trust a sponsor of a deal that you were going to be investing your investors' money in?
Yeah, of course. So like I said, way back in the beginning, we wouldn't have gone in a deal with our investors that we weren't comfortable putting money in ourselves. So that's step one, whether it's, this specific deal or any deal that we're going to raise on and sponsor, is having that alignment of interest, right? So we're not afraid to go in it. We will back our dollars with your dollars and say, I believe in this. So that's a big thing right there. And I guess to get to that point is to say that I believe and hit that button just like the investor is. This sponsor, we know, we've communicated with the sponsor before, several times. They have a good history, they have a good experience, and they actually do a lot of teaching just like us. So there's a level of trust there where you can see that exposure, that kind of raw personality, that raw, like, here I am type of vibe. And then that's just sponsor specific, right? So then there's the deal side of it, and all of their deals are pretty well underwritten. Anything they've underwritten and gone through a business plan with is 9 times out of 10 well exceeding expectations, or doing at least on par with the expectations. So that to me just means right there that their underwriting is accurate and conservative, right? Because if you are bullish on your underwriting and you overpromise, you can underdeliver, and that is going to cause a huge mess of expectations and bad communications, because you're going to have just a misalignment of what should have happened in the deal. So you just see that with this sponsor. And I mean, this is all kind of stuff that we try to emulate too. And that's why we like this sponsor, is because we see this sponsor as someone we want to try to be also, not only just work with, but try to emulate and kind of mirror, is someone with these attributes, right? That's kind of just right there in your face, not hiding anything, and just, diligently underwriting deals, going through the business plan and executing. So I guess it's just kind of the whole package is what we see in the sponsor and the deals that they back themselves up with. So.
Yeah, I don't know. It makes sense that there's got to be something you're looking for, or you just kind of a history. It sounds like more than anything, kind of a,
Yeah, there is a relationship there for sure. Yep.
Got it. I want to ask you, how do you structure and let me back everyone saying, I'm assuming you've created an entity that your investors invest in, and then you make the investment from the entity. Is that how the structure of how you're doing this? You're not taking, individual amounts from everybody and then placing a bunch of individual investments.
Right. Yeah. So typically on these deals, Darren, and I'm sure and the listener might not know, but there's going to be some type of minimum $50,000, $100,000 minimum contribution to equity on these deals. So yeah, like I said, if not all the investors were willing to pony that up, and it's just not the way we wanted to do anyways, but it might not even been realistic if we wanted to do it that way. So yeah, like you were kind of hinting at, you pretty much nailed it. On these deals, syndication deals, you don't actually own a piece of the equity in the property. You own equity in the LLC that owns the property, and there's a big difference there. So you don't own the real estate, but you own the company that owns the real estate. So what happens then is the depreciation and all the tax advantages and all that good stuff can be passed onto that LLC, And at the end of the year, you'll get what's issued a K1, it's called. And that's basically where you get your tax advantages that everybody preaches. And so with that model right there, we basically just took it one step further and copy and pasted, like you said, that entity right below the LLC that owns the property. So we will have that Longview sub entity under the entity that owns the property, and we have that share of, that pooled money in to take a percentage of that deal, and then we will take the K1 and disperse it accordingly to who has shares in our company. So pretty straightforward, kind of cookie cutter. It's not a lot of math. I mean, it's really just taking our numbers and divvying it up to who owns what. And yeah, it's pretty simple. And we didn't want to overly complicate things, because this wasn't a matter of proving our business wits as far as systems. It was more just seeing our capital raising abilities, like I said. So we didn't want to make a huge, crazy ordeal over anything. We just wanted to, see what we could do as far as the raising side goes.
Right. No, I think on a larger scale, this is essentially like a fund of funds kind of thing. If I'm thinking clearly, I mean, you're raising money because you're essentially creating a fund of sorts, or are you raising deal specific?
Yeah, so it would be deal specific, yes. So
Okay.
that's why it's not exactly a fund of funds. It's not any type of thing like that. Yep. Yeah.
Okay.
So in this case, we'd have 3 separate companies that people will put their money into.
Gotcha. And then as far as are you guys compensated for any of the money raising that you're doing? As far as the sponsor of the LLC you're creating, or is it more a matter of just trying to prove your ability to raise money and go forward in that direction?
Yeah. So we've actually talked about that way back when, and we thought it might be a good idea to, charge a management fee for this process, because we are, taking the burden of some risk and then some just managerial and, I guess, desk work, right? So we thought about taking a fee, and in theory, we were going to do that, but we just haven't really gone through with that, because we don't feel like those pennies are worth it to kind of, I guess, not that you would soil a relationship, but it just kind of is a little bit more of an annoyance to charge that little fee. And it wasn't going to kind of make or break our bank. So we just decided to kind of keep it a little more kosher and just focus on, making everybody happy. And like I said, it wasn't going to really change our lives too much. And we didn't want it to be a bother to anyone else. So we were just kind of moving forward. And yeah, just it's fun. Now we're just really distributing checks every quarter. So it's a pretty easy game now.
Yeah, I would think that in the beginning you'd be is wise not to, just as a matter of kind of prove some concept and get some sort of positive, traction. Have people say nice things about you, as opposed to, God, these guys, they took all our money. All I got were fees. Yeah.
Yeah, exactly.
So no, that's great. So you've raised money for 3 specific deals. Do you have anything in the pipe that you're working on?
Yeah, so Florida specific, like I said, our markets, we always are turning out, deals to look at. We're trying to open up the funnel for us. We're figuring out systems which are going to help benefit us and kind of help with the bandwidth issues we've been having. So that's a whole other conversation that we could have today, Darren. But yeah, so I would say on average we look at 50 deals a month, which is we're always hoping to get that number up to kind of see more stuff. Just because in today's market, it's a little tougher to get a deal. It might be a conversion of one deal per 200 deals across the desk, versus it used to be maybe a few years ago 100 or 100 and change across the desk. So that hit rate is definitely lower nowadays. There's a lot of money out there. We come close on a couple offers, and then a couple deals fell through just because of some crazy terms that we are not willing to match. So yeah, it's just about patience for us. We are not going to do a bad deal. We're not going to be impatient. It's not who we are as a team. And we want to be able to feel comfortable pitching this deal to investors that we're going to be partnering with. And if I can't sleep at night, it's just not going to work out, let alone the deal, but just my conscience and everything like that. So yeah, we are still working towards our first one, getting close on a couple. And then, like I said, hopefully one will come through the pipeline and we'll be able to kind of strut our stuff for real this time.
So let me make sure I understand. What you were just talking about is you guys are actually looking at a deal to to be the key principal on?
Yes.
Is it? Got it.
Yep.
Got it.
Yeah. So when I mentioned those 50 a month, yeah, that's all for us being at least, a partial sponsor on the
Lead.
deal where, yep.
Got it. And how long ago has it been that you did the last raise?
So the last raise, yeah. So like I mentioned earlier, the 3 deals we did, we kind of decided after 3 that we didn't want to do anymore just because we felt good about our abilities, and not that it was distracting us to be able to raise money for these other deals, but it wasn't the focus, right? The focus is not to raise money for someone else's deal. We'd rather raise money for our own deal. So we put a halt to that. And I think the last one was, I'm spitballing here, but it was, anywhere between 4 to 6 months ago. So we've kind of, put a pause on that, and we're enjoying the fruits of that labor where everybody's, getting their checks all happy. And now we're going to be, like I said, moving forward to raising for our deals for real, or maybe we joint venture in someone else's deal for real this time, where we're actually getting a piece of the equity. So.
Got it. So I guess where I was trying to go from that question was, how do you stay in touch with your potential investors, when you're in between deals or you don't have something to present?
Yeah, sure. So like I said, a lot of the people in those deals, at least specifically, we are, pretty in touch with, whether it's family, friends, or whether it's those people at the meetups. But just systems wise in general, keeping in touch, that's actually something we've been working on as a team a lot. The systems, and I just mentioned bandwidth. We use Monday.com now. We've been using that for a little while. There's a lot of similar things out there. It's just a preference thing. There's Monday, there's Asana. Some people use Trello. There's a bunch of things to kind of make sure that you have everything in front of you. But Monday and any of these other programs, you can do a bunch of stuff, whether it's use it as a CRM. You can use it for workflow tasking. So we are doing better and improving on making sure that we're having a regular cadence with these people, and not just, keeping in touch to make sure they're ready to be on a deal, but just seeing what they're up to too, because maybe there's a situation outside of real estate that we can help each other out on, or maybe it isn't real estate. So you never know. And like I said before, a lot of this is just kind of fun to get into and meet people with anyways. Like I'm sure we'll be in touch after this, Darren, and anyone else that we've met. We just try to stay in touch with just to say hi. So.
Yeah, no, I appreciate that, because it is a, it's easy to be forgotten or think you're pestering somebody.
Yeah, definitely.
And then I think every day I look at my inbox and there's all these emails that I don't say take me off your list, but I, kind of thing. But it's just so it is kind of a balance kind of thing, and I think that there's but as long as I think you have something of value, whether it be something a deal you came across and say, hey, we came close on this one, but this didn't work out, or here's what we're up to, or just something that kind of keeps them interested, I think is kind of the key. So
Definitely.
when the opportunity does come, you still have a base to draw from. So that's good. Is there been a biggest challenge, when you were raising the money that you came across that you can think of that was, or was it just the concept of raising money?
The challenge was, I guess the raise wasn't too bad. We stayed within our wits as far as our abilities, and I think we did well on that side. Logistically, making sure it was all kind of ducks in a row and making sure we could do it in the way we wanted to do it, that was probably the biggest thing. But just kind of learning from how the business works and learning, kind of the proper way to go about things, we made sure that everything is kind of lined up the way it needs to be. So I guess just that learning curve was the biggest thing, but that was also the reason why we wanted to do it, was just to kind of see that those details that you can't really get until you do. You can read about it, but you can't really, learn that until you actually try something out. So that's a little of a reason why we did it too, is why capital raise for the first time on a big, huge deal on your own, when maybe you try it, a little bit on a different deal and see those details in real life.
Yeah, no, there's no substitute for experience.
Definitely.
Any advice for prospective listeners that have considered raising capital that haven't quite yet gotten to that point?
Yeah, raising capital. I would say the biggest thing you have to do first off, if you want to do it, is just be a real person. People are going to see that. And when I say real person, it's really just more believing in yourself and believing what you are backing. So, like I mentioned, not only do I like the deal, but I was in the deal. So I want to show that to whoever I want to partner with, whether it's in a limited partner investor or a partner, co-sponsor, whoever. I want to see that intention with whoever I partner with, and I try to give that back to them so that everyone is on the same page and comfortable, because there are numbers to all these deals, of course, Darren, and I'm not saying get into any deal as long as you like a person, but a lot of it is knowing the person who's backing this deal. So if you were going to capital raise, make sure you're a person that can be trusted, and don't do that maliciously is a big thing.
Got it. Dave, I'd like to shift gears if we could.
Sure.
As I've mentioned to you previously, by day I'm an insurance broker, and daily I work with clients to do risk management. And a couple of the things we look at when we're considering risk management, there's a couple of strategies we look at. And first one is, can we avoid the risk? And then if we're not able to avoid the risk, we look for ways that we can minimize the risk. And if neither of those are options, that's when we look to see if we can transfer the risk. And that's what an insurance policy is. So what I've been asking my guests as of late is if they could take a look at what they're doing in their business, and if they can identify what the biggest risk is. And just to be clear, I'm not necessarily looking for an insurance-related answer, but if you're willing, I'd like to ask you, Dave Morgia, what is the biggest risk?
Yeah, so thanks for the prep before the show, because I gave it some thought. I'm going to interpret this one as the biggest risk to myself and my pride. And basically that I have now, over the last year, exposed myself into this field and made it public through these channels, whether it's the Meetup or podcast or Instagram, whatever social media. So the fear that goes along with failure is the biggest risk to me, because I pretty much don't want to be able to say that I didn't do it. I don't want to have my tail between my legs and say that I failed. And I think there's some healthiness to having some fear, but then also to kind of mitigate that risk, like you talked about, is the thing that I've done is just go in further and double down, because I mean, what else is there to do but just to try even harder to make sure that I do what I say I want to do. So for me, it was, just keep going. I don't know your experience with podcasting, but I didn't have any, and I just kind of figured it out. I didn't know anything about syndication. A little while back, it's been more than a year, obviously, for that, but I didn't know anything, at some point in my life, and just learning and absorbing and doing as much as I can today and this week and this month to get to the point where I won't have that fear ever. And I might have, some type of fear, but to know that I made it, that was the biggest risk for me, and is the biggest risk for me, is to make sure that I, get that first deal done and get success in this industry. So I guess that's how I took it.
No, I love it. The fear of failure is pretty powerful. And that's I think a lot of people, myself included, definitely can identify with that. So I appreciate you taking us through that. Dave, where can the listeners go if they would like to connect or learn more?
Yeah, so we have a website, we have social media, we have a podcast. Website is lvare.com. That's in Longview Acquisitions. RE is in real estate, so lvare.com. And then you can find me on pretty much any channel that you can think of: LinkedIn, Instagram, Facebook, and that's just Dave Morgia. If you search that, you'll find that. And then last but not least, the podcast that you mentioned earlier is Making Money in Multifamily. We're doing the same thing you, Darren, is just having fun people on the show to talk about what they got going on. So any of those ways, you can find me and definitely say hi.
Got it. Well, I will be sure to list all that in the show notes. Dave, I want to say thanks again for taking the time to talk today. I've enjoyed it and learned a lot, and hope we can do it again soon.
Thank you again, Darren, for having me on. It was a lot of fun today.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.